Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin, and we're going to be looking at the 20-week moving average, but more specifically, we're going to be looking to see where it may be headed over the next few weeks so that we can get an idea of where our bullish support line would be if we are in fact in a bull market. So if you guys like this content, please subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find the link to in the description below. Let's go ahead and jump in. So the 20-week moving average is obviously one of the things we've been talking about for a long time, right? Since this channel started, we've been talking about the importance of the 20-week moving average and seeing at least a short-term successful test of the 20-week is certainly bullish, of course, obviously compared to the prior times we tried to hold it, which during this cycle, which were met pretty catastrophically, with hardly any attempt to hold it for more than a few days. And in this case, we came out fighting. The bulls came out fighting and have held the line for 6 weeks, and so this is pretty impressive. Now, one of the common questions, of course, is, well, what is the 20-week moving average? So the first thing you can do, obviously, is you can just go to TradingView and you can put on the 20-week moving average. If you're unfamiliar with it, you can just go up to this little symbol here, and if you just go to the public library, you can just type in moving average, and you pull it up, and then it'll show up right here, and then you can change that to be 20 weeks if you want, okay? So we're gonna go ahead and get rid of that because we already have it here with our 20 SMA and 21-week EMA crossover indicator, which is what I'm using, but you get the idea of how to plot the 20-week moving average. Now, what if you want to try to anticipate where it may be headed? Well, the first thing you would have to do is you'd have to speculate, and short-term speculations are very challenging, of course, because as we've said many times, the price of Bitcoin on the short-term scale can be more attributed to a random walk, or, as I've said many times, geometric Brownian motion in the short term, not something that we can realistically predict. Because of this, you don't really know what the 20-week moving average will be next week because you don't know what the price is going to be for the week. But with that in mind, if we just assume the price stays somewhat constant at this level, which obviously it probably won't, but just to give you an idea of where the 20-week may be headed, we can do this. So let's first take a measured move from the week of October 12th, which is where we currently are, and we'll go back 20 weeks, okay? So it happens to line up on the week of May 25th. So let's just draw a line there, okay? So we have our line there, our line in the sand, more or less. Whoops. So we have our line, and we can see now that so each new week that prints, we're then excluding a week from this point, okay? So remember, we're plotting the 21-week EMA, which is the green line, or sorry, it's the let me get this straight. So the 21-week EMA is the green line, and the 20-week SMA is the red line. So you can see this is where the 20-week SMA broke right here back in September of 2019, and in February of 2020 it was the EMA that fell first. So this is our line in the sand, and we can say, okay, well, when we calculate the 20-week moving average, we know that we're going back 20 weeks, and it's the average price from these 20 weeks for the simple moving average. Of course, the exponential moving average is a little bit more complicated, and the reason for that is because it's not really that complicated. It's a simple mathematical function, but you're just weighting the more recent times heavier, so it tends to react quicker to price movements, okay? So with that being said, you can look to see these trends of the price 20 weeks ago. So the first thing we can do is note that the 20-week moving average, which again is the red line, at least in recent times, is a monotonically increasing function, which means it's just going up. And the reason it's just going up is because the price is trending up. So this will continue to trend up if the price keeps trending upwards like this. There's possibilities that it could go down at some point if the price starts to tank a little bit over a few weeks. If there's a correction, of course, we could see the 20-week moving average going above it. But with that being said, what we can do is just go back and look 20 weeks ago. Well, the price 20 weeks ago was approximately, it varied between $8,700 and $9,400. The candle after it was as low as 9,200 or so, all the way up to 10,400. But after that, we basically just slowly went down week over week. Now, the difference in price between this level and the level that we currently are at is approximately, well, this just shows the percentage, well, it shows the number two, approximately $2,000. Okay, so approximately $2,000 is so when we go to calculate our new week, we're replacing this week with the week from 20 weeks ago. Okay, and when you do that, we're noting that, all right, well, now we're changing this 1 week of data. So each week carries 1/20th of the entire 20-week moving average. So it carries 1/20th of it, and we're increasing this week. We're getting rid of this week, and instead we're replacing it with one over here. So basically the idea is you get rid of this one and then you replace it with the next one. So if this one, let's just say for the hell of it, it's $9,000 and this one is $11,000, just as an approximation, then the difference would be $2,000. Okay, so if you also have to remember though that for the simple moving average, this is only accounting for 1/20th of the weight of what the 20-week simple moving average is. So if you are, if you're replacing one of the numbers and you're adding 2,000 to it, well, you also have to remember that it's only that extra 2,000 is only accounting for 1/20th. Okay, so 1/10 of $2,000 would be $200, and then so then half that, which would just get you to the 1/20th point, would just be $100. Now, does this make sense? Well, if you go back and look, so this is just a back of the envelope calculation. Obviously, I'm not doing any real math here, but if you look from the last week, so let's say October 5th, and we're looking at the 20-week moving average, it was $10,345, and the following week it went up around $93. Okay. If we measure it from the September 28th to the following week, it went up approximately $129 or so. So it seems like it's somewhat intuitive at this point, right? You're looking at the difference between this one and this one, accounting for the fact that it only makes up 1/20th of the weight, and then from there you can figure out approximately how much this will increase. So if we assume that this will continue to increase by approximately $100 per week, let's do that. So we'll start here. We note that the 20-week moving average currently, let's just plot it on here so we can see it. So currently the 20-week moving average is, let me change this one to be the 20-week, not the 140-week. So it currently is $10,439. Okay. So now what we're going to do is we're going to take that and we're going to extend it out. So next week, $100, and put it around 10.5, or sorry, upper 10.5s, 10.5, or maybe mid 10.5s, 10.5.2, or so. Let's just say 10.5. And then the following week, it might put it at 10.6. But one of the things you have to recognize is this is going up, this is trending up, and this is trending down. So $100 might actually be somewhat of an underestimate as to how quickly the 20-week moving average could go up. But let's just go week to week. So this would be, so we don't need to draw the line. Let's just draw it out like this. So we would have 1 week, 2 weeks, 3 weeks, 4 weeks. So this would get us to the November 9th, the week of November 9th. If the current price is 10.4 and we go 4 weeks in the same manner, even if it just stays constant, we would expect the 20-week moving average to be at approximately 10,800, 10,900. But because this is going down, this trend is going down, and this one's going up, we might suspect that the $100 a week could be an underestimate. And so in about a month, the 20-week moving average could in fact be, at around $11,000. Okay, so it changes the narrative, of course, right? I mean, you have to, the narrative is the same, but the price, the level that we hold is different in terms of an absolute price, but the 20-week would be the same. So if in fact we see Bitcoin either come back up, test the 20-week, and then come back down, come back up and test the local top, and then come back down to the 20-week, by the time it gets to the 20-week, the 20-week moving average could be over $11,000, okay? I mean, if we come back immediately and test it, it might correspond to 10,700, 10,500, depending on how quickly that occurs. But this will just give you a general idea of where to expect the 20-week moving average to go over the next, say, month or two, because we can just look at the candles that are being replaced, and also recognizing that this is trending downward, this is trending upwards, and so that if this simple trend continues, we would expect it to at least move up by approximately $100 per week, which is a somewhat conservative value. So within 4 weeks, we would expect, since the current 20 week is at 10.4, we would expect it to be at least 10.8, probably closer to $11,000 middle of November. Okay, so if in fact this same pattern that we saw in the last cycle plays out, and we go to the local top, and then come back down to the 20 week, and let's say it corresponds somewhere over here, and then we go back up to the local top, and then if we do what we did last cycle and then kind of move sideways up here, wait for the 20 week to catch up, and then we break out, and again, I don't know if this is going to happen or not, but then that would be, that could be something, the pattern that we see, of course, and this is just looking back and comparing it to the last cycle where we did essentially that very thing, right? Came up to the top, back to the local bottom, back to the top. This was the 20 week, back to the 20 week, back to the top, sideways to the 20 week, and then it moved up to the next step. The next step obviously being around the $14,000 mark, mainly because if you look at monthly candles and extend out from 14K up here, you can see that this is the top of those monthly candles that ultimately were, that took us to 20K. So this would probably be the next stepping stone. And if this is in fact the bull market, the idea of, 2 steps forward, then 1 step back, and then 2 steps forward, and then maybe 1 step back. So if this continues, then maybe we get up to a stable 14K in early 2021, and then slowly work our way back up to a sustainable 20K. We work our way there throughout 2021. Okay, that's the idea anyways. So let me know what you guys think of the content. If you guys like it, please subscribe to the channel, give the video a thumbs up, check out the Telegram channel in the description below. Remember, if you want access to the premium list, well, the risk analysis and premium Telegram alerts channel, chat room, weekly reports, weekly videos, and unlocking access to all the prior reports and videos, then make sure you check out my website, intothe.cryptoverse.com, and you'll get access to all that. And you can pay with cryptocurrency if you want to pay for a lifetime subscription. That way you don't have to worry about a recurring subscription if you would prefer. So let me know what you guys think. I will see you guys next time. Bye.